How are you doing? This is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world, options trading program. And what we're getting ready to get into really quickly is an analysis of GameStop. We're going to kind of talk about some of the trends, try to give you a perspective of how I'm looking at it from an options trader standpoint, and maybe even a long-term investing standpoint, and start talking about possibilities of how we would play this company if we decided to pursue this from a call standpoint or also from a put standpoint as an options trader, right? So let's go ahead and get into it. So we know that GameStop is a company. It's been in the news a lot lately, probably over the past 120 days, because they had a massive spike up on their share price, and it became what we call like a big time Reddit play. A lot of attention was put around it. We're going to kind of get into that a little bit because the narrative around GameStop was that this was a ticker that a lot of retail was able to jump into. And I knew some individual people that made a lot of money on this particular play. But when we start looking at a lot of the data around GameStop, we understand that this really was not a retail play. It really was a institutional play that a few people in retail were able to take advantage of. And we can kind of see that based on some of the data that we're going to present in this really basic analysis. So currently right now, on April 14th, GameStop is trading at $165. It's up $24 or 17%. Let's look at their 5-day really quickly, right? So this is their 5-day chart on 5-minute candles. And then we also can look at their yearly chart, which is kind of what we're going to go into. Now, the question we want to ask ourselves is, should we be bullish or bearish on GameStop? My argument is that we should be bearish on GameStop long term. You may see some bullish activity short term because of maybe press releases or news. However, I really think this stock is getting ready to start selling off probably very gradually over the long term. And I'm going to kind of go into you why I believe that. And so what we're first going to do is look at the chart because I want to kind of show you the overall chart. So GameStop right now currently is at 164. So this is the 1 year. Let's look at the max chart if we can get it. OK, so here's the max chart for GameStop. So we're starting at 2003. Right. And we saw that GameStop traded around the $9 to $10 mark. We got around 08. And what we saw with GameStop is that it bounced up to around $60. Right. Over time, around 2008, 2009, it fell around 20. We got another around $60 mark around 2013. And it's just moved down since then. Right. So GameStop really probably from 2015 when it was at $40 has just gone downhill. And one of the reasons is because the whole industry and the market, the way in which people consume games has changed. Things have moved more online. Retailers like Amazon have given people the ability to buy hardware direct to consumer as opposed to having to leave your house. There's also other websites that sell the hardware. So GameStop essentially had a middleman position in the market for video game consoles and software, right? Where they were the retail outlet. So you went to GameStop, you got your console. They also resold consoles. You got your games, right? You got your equipment. So essentially they was a middleman. With the e-commerce space starting to really build up, and especially with I think gamers being a little bit more savvy as far as how to leverage technology and how to utilize it than maybe the average consumer, GameStop started to lose their position as that middleman, where essentially they were able to sit in the middle between the consumer and the manufacturer. And so as the industry started to change, they started to lose a lot of their importance, which means that it started to cut down their revenues, which means that they started to lose a lot of their share value. So when we look at this period right here, right, what we're seeing is just a declining share value. So we're at $40, 2015, and then we're just going down a slope, right? And so then we get to 2020, we're around $5. So in a 5-year period, we went from $40 to $5, right? So let's go back to the 1 year. So now what we saw on the 1 year was 2020, 540. 5/4 2020 had about a $5 share price, and it literally traded horizontal for months and months and months and months and months. And then what we saw was this rise around January where it started to spike up, and that's kind of when they got everybody's attention. So we're seeing that here. OK, the challenge with this particular price that we're currently at now is that GameStop has never been this price. It's never been 160. right? Even at its heights a decade ago, it wasn't even close to being over $100. So the challenge that I'm having is that there's really we're in a marketplace that is not as favorable to this particular company and what they're trying to do. However, the share price is way higher than it's ever been in the history of the company. And so I just don't understand how GameStop supports the price. That's just my first argument to why we should be bearish on this. I don't understand how they support the price, because we're at a price that they've never been in the history of the company. The whole marketplace has changed. So the marketplace is not as favorable to this company, especially long term, based on their current business model. However, they're at a price they've never been. OK, my second thing to why I'm kind of bearish is that when we start looking at institutional ownership. So from NASDAQ, we got it at 105. Now, I think that data may be a little bit off because I don't know how you could have 105% ownership. And I know that short selling has a lot to do with it. However, we understand that institutions, because if you go to Yahoo Finance and you look at the statistics, we have institutional ownership at 110. So both particular platforms are showing a really, really high level of institutional ownership. The challenge is that when institutions decide to sell their position in this company, even though it may be gradual, it's going to have a dramatic effect on the company. And then maybe, retail can come in behind it and try to buy it up if they believe in the narrative. But this whole idea that retail, was responsible for the drive up in the price, I don't really think that was accurate, but it made sense because, like I said before, is that the outlets like CSNBC and a lot of people on YouTube, their audience is retail. And so they don't really want to hear about institutional behavior. They want to hear about retail behavior. So they created a narrative that retail was driving up GameStop. But if you look at the actual data, that GameStop, really the float, which is very, very small, is owned by majority institutions. So I think they start to unwind their position over time as GameStop really can't show that they have the ability to be successful in this particular environment. However, I think it's going to take time, but there's so much room for them to fall from 164 to around where I think they're probably valued at is probably between $25 and $50. And we'll show you, on the chart, they closed at 325 and then they fell down to around $40 about 3 weeks later. And then they started to move themselves back up. And one of the characteristics you see when you have this type of stock with a lot of institutional ownership, but it's very volatile, is a lot of churning. And what I mean by churning is that you start seeing a lot of massive price swings, where it's going to 400, then it's falling back down to 40, and then it's popping back up to $250, $300. You're seeing massive price swings in a relatively short amount of time. OK, so this trading activity on this ticker is very, very, very abnormal. And I wouldn't have confidence. My perspective is that it's a higher probability that it goes down and it starts to grind down as opposed to getting back up to 400. I don't think it ever goes back up to 400 again, even though we still got people that think that it's going to go to 1,000. The question is, if you have so much institutional ownership, what other institutions want to buy it at a higher price to drive the price back up? So what I think that you're going to see is there's going to be a wait and see aspect to GameStop. And if they can show that they actually have a business model that's going to allow them to be competitive in this new era of digital downloads and software going direct to consumer from either the manufacturer or some type of outfit like Amazon, and they can figure out their niche in this space, right? Then they may have some success, but I still don't think it justifies a 163 price. Now, if we look at their earnings, they missed their last earnings. So their last earnings was estimated at 146, was reported at 134. Now their next estimated earnings is negative 0.56, right? So hopefully they can they can report better than that, because the estimation or the expectations are really, really low. They're negative. So you're estimated to report at a negative number, so it's not going to take a lot to beat it. Okay, so looking at this particular article, we understand on their last earnings, the net sales declined by 3%, store base decreased by 12%, right? But the industry-wide total sales were up approximately 33%. So gross margin declined from 27% to 21%. Okay. And adjusted operating income for the quarter was 29 million versus 109 million a year ago. Okay. The adjusted operating loss for the first 3 quarters of the fiscal year were 268. Software shares were down 25%, 731 million against 984 million a year ago. So their year-to-year comparables were down in a lot of different areas. Now we understand COVID plays a part in that. So they're going to get a quarter now that they're getting ready to report where COVID can't be blamed for having the impact on them like it could have been for what happened in the fall. Okay. However, like I said before, is that they have to come up with a model of business that works for this new environment that we're in, because their retail middleman model, it just really doesn't work. The consumer has figured out how to go around them to get what they want. So their positioning is no longer as important as it might have been a decade ago. Because I remember with GameStop, it was easier. And I wouldn't say you had to go to them, but it was easier to go to them to get your Xbox or your PlayStation and also your games, because you didn't have the online that you have currently right now today. Right. So they had a really good position in the marketplace. Over time, they lost their positioning. It was too easy to go around them. So then they started losing revenue as a result of that. They're just not as important in the minds of the consumer as they may have been a decade ago or even 2 decades ago. So that's what we want to look at with GameStop. So then if we're bearish on this, so let's create a bullish case. A bullish case is that Cohen and his team, and I can scroll down and let you get an idea who his team is if I can find it. Give me one. Okay, so this is his team, right? So Chief Operating Officer Jenna Owens, she was director at Amazon, got experience at Google, Honeywell, right? A Chief Technology Officer, CTO Matt Francis, engineering leader at Amazon, experience at QVC. So he's bringing in very much a team that has a lot of background in e-commerce, right? And, fulfillment. So Chief Growth Officer, Elliot Wilk, 7 years at Amazon, experience with Procter & Gamble and brand management. Vice President Kelly Kirkland, she came from Chewy. Vice President e-commerce, came from Chewy, prior experience with Amazon. Supply chain systems, previous is Zulily, if you pronounce that right. So that's supply chain. So you see a lot of former Amazon, Zulily, right? QVC, Chewy. So he's bringing in people that have background in e-commerce, fulfillment, supply chain technology, that understands how can we build a model that operates in this new environment where before everything was kind of based around physical, right? And they kind of understand the behavior of the consumer in that space, because what we think about GameStop is that they really didn't understand the new consumer, where, they may not want to come into a GameStop except under specific scenarios. So then how can we build a relationship with them where they can get what they need without having to necessarily come into the GameStop? And GameStop's whole model was based on being a destination brand where you wanted to arrive at GameStop to get what you needed. And I think they understand that has to change. So the bullish case is that with implementation of this team, they're able to figure it out. What I think changes everything for GameStop is a strategic partner. I believe that GameStop, if they can combine with a strategic partner that changes people's perception of them in the marketplace as a result of that strategic partnership, and they're able to show that they're able to get some traction with that, I think that can really turn everything around for them. I still don't think they can support 160, 140, 150, anything over $100, but I think that would change people's perception of them in the market, right? But we got to see whether or not they have that ability to form that strategic partnership. But I really think that's going to change everything for them. I don't think that they can do it by themselves. I think they need to have a partnership that makes people see them differently than how they've currently seen them in the past. So then if they're able to be successful with that, then I think that can justify GameStop being probably around the $100 mark until we can get some further information from earnings and things of that nature. However, if that does not take place, and as they continue to put out earnings, they continue to miss, I think this continues just to walk its way down. And so looking at options, what I would do from a bearish standpoint or even a bullish standpoint. So let's say I'm bearish and let's do the bullish case, right? A bullish case is I would look at the money calls, which are going to be very, very expensive with a time horizon on them. So we're looking at the money calls, the 150. So at the money or in the money calls. The 150 in the money call for January 2022 is 7,000. Right? Or you can say, hey, I'm gonna get the $100 in the money call for $9,000. Right? So if you're going to play this with calls, I would still tell you to go very long with it. Right? I wouldn't do anything short term because I think the volatility here is so bad that you can get caught up in it. If we're looking at puts long term, same thing, January 21st, 2022, I would look at the 50, which is 885. You got 2,000 open interest, and maybe the 55, which is 1,000 at 4,000 open interest, and also maybe the 30, which is around 4,000. But I wouldn't look for anything short term on this being bullish or bearish, right? Because I really think as they start approaching earnings, they probably will start to sell off in an anticipation that they're going to blow their earnings. Now they got some time, but what GameStop is going to probably turn into is a company to where they're going to just be PR based for a very long time because they don't really have anything to talk about. Okay. So they're going to be PR based until they can show through earnings that either they have something going or they don't have something going, or they're able to show some type of strategic partnership that's going to change people's perception of them in the market and make them a lot more optimistic on their long-term prospects to be successful. Their balance sheet, let me look at the statistics, is not great, right? It's just not. And it's because that revenue is declining. So their balance sheet is not great. However, it's not the worst I've ever seen, but it's not great. A short percentage of float, we have around 40%. That's going to put a lot of downward pressure on the stock. However, it is what it is. GameStop has been highly shorted for a very, very long time. That's why it was $5. So if you're looking at this particular stock to trade it as an option standpoint, I would tell you really the most valuable thing you can do is buy yourself some time. If you're looking at it from the call side, I would tell you to try to get as close to the money, at the money, or in the money as possible, and then try to buy as much time as possible. And you're going to have to accept paying a lot of premium for it, right? If you're looking at this from the put standpoint, I would tell you to try to buy as much time as possible. Go out to 2022 if you can. I think short-term put options on this, you're going to just end up getting caught up in it because of the volatility. So you could have an option where just that week they're trading really well. And then, you may have to exit with a loss. And then the next week they dump $40. And it can happen because we see today they're up $18. So this volatility on this particular ticker. But I've seen this with a lot of companies like this to where, let's go to the 1 year. What they start doing, right, is they just start to move down. Right. So we're at this 220 close. And then what they'll do is over the next, 90 to 120 days, will end up at around $50. They just start to grind down. And I've seen this happen. Unless, like I said, something miraculous happens with this company where you can justify moving back up. So I'm not bullish, but like I said, as always, create a bullish case scenario just in case something can happen in opposition to what I currently believe. So that could change everything for GameStop. And even in a bullish case, I think it lands around $100 best case scenario. However, I'm very bearish on this, and I think this is one of those scenarios where around June or July, let's say this, around August, September, we're going to probably be south of $50. But it'll be very gradual because as these institutions unload, I doubt they dump it. They probably just, slow sell it when they realize that, Cohen and his team can't figure this out. So let's go ahead and just get out because nobody really owns a lot of this company because the float is so small. Talking about a $45.2 million float. 45.2 million share float. So it's not like you got a big position in this. Okay. So what you can do is you can go to the SEC and look at their documents and find out, or maybe even CNN, I think CSNBC, NBC, one of those reporting agencies can kind of tell you who owns the shares and how many they actually own. And you can start to see how large their position is. But, because of this being such a small float, you're not going to have probably anybody holding a massive amount of position. So then it means it's not going to be difficult for them to get out of the position. Right. So I think you'll probably see this just walk down really gradually over time, because we already know it can hit 50 in no time. Right. And so I wouldn't say necessarily 50 is a support, but, it traded here for so long. It traded at these numbers for so long. I just can't be confident at this number. I can't be confident at anything north of $100, really anything north of 50. OK, so don't want to ramble, don't want to keep you long. I would tell you, if you're going to trade this, really start to understand what is going on internally to the company can move the share price. Understand how the amount of institutions are holding the float, how that can move the share price, understanding how it being such a high short percentage, because you may have days or weeks where it goes under some type of short attack and it loses a certain amount of share price, but then that can recover very rapidly and it's shown the ability to do that. And understand how these things are affecting this company. And if you really become an expert on it, you may be able to play both sides of the scenario. So you maybe can be short-term bullish and long-term bearish. But that's going to take time and you really understanding this company and how it trades and how what's going on in the overall market is going to impact this particular company. So I wanted to shoot that out to you. If you found value from it, let me know in the comments, share it out, trying to do a little bit more talking about these individual companies. This is David W. Williams, also known as Diamond Dave, and I'll talk to you later.